Have you ever lost a trade where everything seemed perfect? The setup was at a strong support zone with full confirmation signals and news backing the trend, yet the market suddenly reversed, and all you could do was sit silently in front of the screen, wondering where you went wrong. I've been there, and if you're listening to me now, I believe you've been there too. Until one day, I met a man no one knew. No fan page, no courses, no bragging. He lived quietly, but traded as if he could see the future. He became my mentor. And he said one sentence that forever changed the way I look at the market. The chart is not the market. It's just a curtain set up to hide what's really happening. From that moment, I stepped into another world. A world unlike any trading class you've ever attended. A world where the Fed chair's gaze during a press briefing meant more than the CPI number. Where good news wasn't for you to buy in, but for someone else to silently pull liquidity out. Today, I'm going to share with you the first door my mentor opened for me, macroeconomic analysis, from the perspective of someone who's never been online, but has survived crises most traders never return from. When I first entered the trading world, I believed in technical analysis, not just casually, but with the faith of a true believer. I studied every candlestick pattern, every price structure, every indicator, RSI, MACD, Bollinger Bands, Fibonacci. I read every book written by legendary traders, word for word, page by page. I stayed up countless nights analyzing charts, backtesting trades, drawing price zones like I was touching the key to success. But I still blew up my account. Not because I was bad, but because I was using a scalpel to dissect an elephant. The market doesn't react to technicals, it reacts to power and capital flow. But back then, I didn't know that. I thought I was analyzing the market. In reality, I was only seeing what others wanted me to see. Then I met him, the man I would later call my mentor. At the time, I had just lost a USD JPY trade. The news was good, I went long, and price tanked. I lost 40% of my account in just a few hours. I brought that story to him, hoping he'd find flaws in my technical analysis. But he didn't look at my chart, didn't ask what indicators I used, didn't measure waves or identify patterns. He just poured tea, looked at me calmly, and asked, "You think the market reacts to news?" I nodded, textbook style, "Yes, based on expectations and data." He smiled. The kind of smile I'd later understand was full of compassion. "You're wrong. You're only seeing what they allow you to see. What really drives the market is hidden behind the scenes." I froze. And then he said something that became my first wake-up call. The chart only reflects the psychology of people without access to information. From that moment, I knew I had to start over. Not to relearn trading, but to learn how to see the market through the eyes of those who actually run it. Not as a trader, but as someone who can read the flow of power. Right after this, I'll share with you how my mentor reads the market, without even looking at charts, and why the survivors in this market never talk about RSI, engulfing candles, or chart patterns. They only talk about one thing, the real reaction of capital flow. After my mentor taught me how to analyze the market through capital movements and policy reactions, it was like waking up from a long dream. I started trading less, but every trade had a reason. I stopped fearing news. I no longer clung to signals. I just watched and waited for the real reaction. During that phase, I wanted to help a close friend, someone who had stayed up all night trading with me, who had blown accounts, suffered, and repeated the same mistakes I had. I shared everything, every macro insight, every lesson my mentor gave me. I spoke with sincerity, but he didn't just reject it. He snapped back harshly, "You think you know more than me?" I was stunned. I said, "I just don't want you to go through that same cycle again." He snarled, "I don't need you to teach me. I trade my way. Who are you to act like a mentor?" That hit me hard, not because of ego, but because I genuinely wanted to help. And what I got in return were bitter words from someone I once considered closest. I told my mentor the story. He just sat quietly, expressionless, then said one sentence, "Don't interfere with someone else's karma." I fell silent. He looked at me and added, "If you want to help someone, speak. But whether they listen is their choice. A tree only sprouts when the seed has decayed long enough in the soil." That day, I understood. Not everyone is ready to understand. Not everyone wants to wake up, and not everyone is meant to wake up right now. That's why I created this channel, not to teach you how to enter trades, not to brag, but to say things that if someone is truly ready, they'll hear it. If even one person out of thousands hears this video and pauses in time, steps away from a dangerous trade, or reflects before depositing again, then for me, that's enough. Because the market doesn't need more technically skilled traders. It needs more people who understand themselves before they try to understand the waves. And if I can pass on even a small part of what my mentor taught me, and just one person hears it, that's worth continuing this story. Right after this, I'll share how my mentor views the market without needing a chart, and why those who quietly survive in the market never talk about technicals, only about capital flow reactions. After our first meeting, I followed my mentor like a shadow. I thought he would teach me some divine pattern, an unbeatable system. But he didn't start with charts. He didn't reject technical analysis, but he never opened a chart without first understanding the macro context. My mentor had a complete strategy, a system that had helped him survive multiple crises. And in that system, the first step was always macro analysis. He believed that if you don't know where the big money is flowing, then no matter how accurate your technical analysis is, you're still betting against the ones who hold power. One day, he placed 3 lines in front of me. 1, monetary policy. 2, market reaction behavior. 3, global capital flow. He underlined the second line and said, "This is where most traders fail, because they don't analyze reactions, they analyze expectations. And expectations are often just what the media feeds to the crowd." He gave an example: gold prices dropping despite good news, USD rising even though CPI was low. The crowd gets confused, but those with capital aren't confused. They've already placed their trades before the news hits. I asked, "How can we know that?" He replied, "You don't need the details. Just observe who has the power to trigger reactions that defy logic. Those are the ones who matter." That was the first time I realized macro analysis isn't to predict prices. It's to understand who's holding the flag, who's leading the game. My mentor wasn't against charts. He just taught me that if charts are maps, then macro is the wind. Don't open your sails if the wind is against you. Since that day, before I look at charts, I check interest rates. I look at the Fed's meeting calendar. I read between the lines of central bank speeches. And I started seeing charts not as mysteries, but as the visible tip of an iceberg whose underwater part I had begun to understand. Now, I'll share with you the 3 core principles my mentor uses in his macro analysis. If you've ever lost trades due to unexpected market reactions, or if you've been confused by why the market behaves oddly, this might be where you need to start over. After months of observing my mentor, watching him silently read interest rate calendars while others debated loudly, I noticed something. He never treated the market like a technical game. Whenever I asked, "Do you think USD will go up or down?" he would reply, "You're asking the wrong question. The right question is, who has a reason to make the USD move?" Principle 1, analyze reactions, not data. My mentor didn't care how the market should react. He only cared how it actually reacted. He used to say, "News doesn't matter. What matters is who acts first and who flinches afterward." Once US CPI came in better than expected. The crowd rushed to buy USD, but right at that moment, he sold. I asked, "Why? The news is good." He said, "The crowd is jumping in last after everyone already knows the good news. The ones with real positions are starting to exit." And he profited. Not because he predicted the move, but because he understood the rules of reaction. Principle 2, observe capital flow, not charts. He taught me how to track silent capital movements, what ETFs are buying, how countries adjust their forex reserves, where government bonds are being dumped. He said, "Capital doesn't lie, it just doesn't speak in words. But if you learn to listen, it says more than the news ever could." When I started following capital flow instead of chasing patterns, I stopped falling for fake breakouts. I wasn't misled by sensational headlines anymore. Principle 3, think paradoxically. Go against mass expectations. This was the hardest and most painful principle. It forced me to question everything I thought was true. When the market rises, I must ask, who's preparing to exit? When it drops, I ask, who's quietly buying? My mentor said, if you're acting with the crowd, you're already late. If it feels hard to enter a trade, maybe you're finally on the right track. Once, the whole trading community expected a certain currency to rise due to easing policies. My mentor didn't just sell it, he called it the most beautiful trap of the year. And he was right. The currency crashed. I stopped questioning him after that. These 3 principles sound simple, but if you practice them long enough, you'll realize they don't teach you to win. They teach you to survive. And in trading, surviving long enough is the greatest win. Right after this, I'll share with you a trade I once made using these 3 principles and how it completely changed the way I face the market. Not because of the profit, but because, for the first time, I wasn't afraid when the price moved against me. I still remember that day vividly. The US had just released a beautiful CPI report. The entire community was thrilled. Forums were buzzing. News outlets raced to predict that the USD would continue rising. On the chart, USD JPY had broken past its previous high. The pattern was perfect. The news was positive. Market sentiment was incredibly bullish. Everyone was buying, and I sold. Yes, I sold right at the top, when everyone else was entering longs, when everyone believed there was no reason for the USD to drop. Why? Not because of technicals, but because I saw capital flow standing still. The news came out, price moved, but there was no heavy volume, just light pushes, as if someone was creating a fake rally to draw in late buyers. I remembered my mentor's words. When price moves sharply but capital doesn't follow, someone is pushing the boat just to jump off, not to keep sailing. I placed a short position with a tight stop loss. I wasn't aiming for a big win. I was simply acting because everything pointed to something being off. And then within 30 minutes, USD JPY slowly reversed and dropped like a stone. No bad news came out. No one could explain why. I didn't catch the whole move, but I knew I was right because I understood the story behind the flow. That trade didn't make me rich, but it gave me something hundreds of trades before never had: understanding. For the first time, I didn't enter based on a signal. I entered based on irregularity. I didn't care how many pips the price went up or down. I just saw that the market was lying, and I acted on the silence of capital flow. From that trade on, I was no longer a trader who clung to charts. I became someone who watched the market like a living being, one that speaks, deceives, and hides. Now, let me end this first part with a promise and a message. Don't look for a holy grail system. Look for the source of power behind the scenes. You might be hoping I'll give you a formula, an indicator, a divine pattern, but no, what you've just heard is only the first gate in my mentor's strategy. Macroanalysis is not the destination, it's just the first door. The door that lets you step out of the shadow of dependence on charts. Once you pass through it, you'll start to see what most traders never see: the strange reactions to seemingly obvious data, the silence of big money before a reversal, and the invisible hands manipulating the chart to push you into error. That's exactly what I'll share in the upcoming part 2. How my mentor spots market manipulation without using volume or footprint charts, just by how price lies in silence. You don't need to be better than others. You just need to see sooner than they do. And to see sooner, you must stand from the right vantage point. This channel wasn't created to teach trading. It's to share what, if left unsaid, would leave many more walking into the same traps I once fell into. Someone once asked me, "You've been saying this for so long. Does anyone actually understand you?" I smiled and said, "If even one person understands, that's enough." If you've listened this far and something inside you stirred, maybe you're that person. Leave a comment. I'm ready to see it all from the beginning. That's not a commitment to me, but to yourself. And if you truly found value in this video, share it. Somewhere out there, someone may be just as lost as you once were, and one sentence from this might save them from another wrong trade. I was once a trader who traded like a gambler. Today, I still trade, but with the mindset of a survivor. See you in part 2, where I'll tell you how my mentor detects even the most subtle manipulations in the market long before anyone else sees them.